Hi everyone, today let's talk about the new AI ETF, then we'll take a look at the economic calendars, then we'll look at Max Payne for the end of the week, then we'll get into the charts, then we'll look at my positions and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So AI has definitely taken over the markets, and now there are ETFs dedicated to just these AI companies, saying that it's not a fad, but it's actually a new boom in the financial markets as well as in the regular economy. The ETF is going to be called Chat, which makes sense. And they're going to hold companies like C3 AI, NVIDIA, Microsoft. NVIDIA is the top holding at 8%. And its shares are up 42% over the past 2 months. Obviously, the company has been going sky high over AI. And the Chat ETF is up 8% since inception on May 18th. Overall, it seems like AI is going to play a big role in the economy going forward. Whether it's overvalued in the short term remains to be seen, but it does seem like the early stages of something that's going to be big for the economy at some point in the future. Moving over to the economic calendar here, you can see today we have that OPEC meeting. Looking at Monday, not a ton. Services PMI at 9:45, that's a big one. ISM non-manufacturing at 10 o'clock, another pretty big one. But really the rest of the week is pretty tame. Crude oil here on Wednesday, jobless claims on Thursday has been a little bit more impactful recently. And on Friday, there's really nothing to worry about. So a light week here for economic data. Moving over to Max Payne. Max Payne is still at 415, so right in that same range that it's been in. SPY is up at 428. Highest call strike, 425. Highest put way down at 340. Put call ratio still very high, but the amount of options in the market is quite low here, below 1 million. Obviously, this will rise throughout the week here, but this is still very low at current levels. Definitely interesting. If the market was going to fall, it certainly seems like this would be a situation where it could start to fall at least a little bit, where there's very few options in the market compared to what we've been seeing. Wonder if this is because of the low amount of economic data coming out this week. There's expected to be a little bit less volatility potentially, and because of that, people are hedging their portfolios a little bit less. But either way, it's interesting to see how few options there are in the market, and keep that in mind as we go into this week of trading. In terms of prices, same as before, between 420 and 425 makes sense. We finished up here at 428 this week, right at the top of these option chains, where some of these calls made a little bit of money and all of the puts lost money. So keep that in mind as well. Could happen again right in this same 420 to 430 zone. And like I said, Max Payne is all the way down here at 415. Moving over to the charts, starting with the SPY on the monthly view, you can see that previous month was a doji for May. And then we've already had a very strong month here for June, pushing all the way up to that 428.59 level. We'll look at the levels a little closer on the shorter time frames, but I want to highlight that momentum is getting close to bullish. RSI, very bullish. Volume stepped up from April to May. And then we'll continue to watch this June volume candle. If it steps up here again, you would expect this to be a nice continuation here in June. And it might end up looking like a very strong candle, similar to what we got in October or July of last year. Moving over to the weekly, you can see that key level. 439.98 is the next horizontal resistance. We have this medium term trend line that we're basically right on top of. Longer term trend at 432.25. So at least a couple of points of upside expected the next week, in my opinion. Momentum and RSI are both bullish, and we could absolutely overthrow that and get up to the 439.98 level. Be a little bit big of an overthrow, but it's certainly possible, similar to what we saw here where we came up to the trend, overthrew to the next horizontal resistance, and then we pulled back and had that bigger pullback to trend support. So overall bullish in the short term, but we could be getting into an area where we have at least somewhat of a pullback in the next 2 to 3 weeks. Moving over to the daily, I just want to highlight that we got above this shorter term trend, hitting that medium term like we talked about, longer term sitting in that same zone. Momentum and RSI are both bullish, so everything looks good. Interesting level at 428.59. You want to see it get above there for the continuation. Maybe we see a little bit of a pullback here. That would be interesting. But overall, everything still says bullish. Moving over to the Qs here on the monthly view. basically looks the same as the SPY, just a little bit more bullish. Momentum already flipped to bullish for this month. That's the first bullish month on momentum that we've seen going back to June of 22, which was the start of that bigger pullback here. Now that we flipped back to bullish, I would honestly expect this to continue quite a bit for the next few months, potentially. Doesn't mean we're going to go straight up every single month. You can see even on this down move, we had bearish momentum, but a couple of bullish candles in here for months. So we could certainly get some bearish months over the next year. But overall, it seems like we're going to continue to be bullish on the NASDAQ. Moving over to the weekly chart, looking at those key levels, you can see we're right here at 354. 359.93 is my next key level. Above that, we have the March highs sitting at 371.25. So we're in this zone. Certainly could get a little bit of a pullback, maybe down to 346.87. That would be interesting. If we gap down to start the week, that would be very bearish. We got the gap up, slight rally. If we gap down and pull back, that would be an island reversal here on the weekly chart, and that could certainly set off a little bit of a pullback. You could certainly make an argument for it. We are definitely overbought on the RSI. Volume has been kind of low for this most recent rally compared to some of the volume that we saw previously here on this down move. I would like to see this volume pick up next week if this rally is going to continue, but certainly a little bit precarious on this extension. Moving over to the daily chart, you can see we broke above this level, retested it, and we're now rallying up to that next level, 359.93. If we do a similar move to this next horizontal resistance, then 371.25 is the key level. Very overbought here on RSI. Momentum still very bullish. It seems like we're kind of accelerating here to the upside, so definitely not a time to sell short, even if we are extended on the weekly chart. Moving over to the Russell here on the weekly view, we got bullish momentum on the Russell for the first time, going all the way back to the week of March 6th, which was that big bearish candle coming off of that shorter term rally. And it seems like we're going to get a couple of weeks of bullishness here, potentially all the way up to 195.15 in these previous highs. That would be very interesting. We've had a very long consolidation here for the Russell. We're starting to break out to the upside, so very, very bullish here on the Russell. It was the top performer in the Friday session. RSI got back above the 50 line. You love to see it. Volume didn't quite get there. I would like to see volume pick up this next week as we get the continuation up to that 189 level. I want to see a break above 183.28 early in the week, above that 200-week moving average as well. If we get the break of these nearer levels and start to look to these further levels, that would be a big bullish sign for me. Similar to the second week of January, where we get this continuation rally and pushes very aggressively through that level. Maybe we see a little bit of consolidation, but then that continuation up to 195. That is what I'm looking for here on the Russell. And moving over to the daily chart, you can see just how aggressive that gap up and rally was. Took out that 179.17 level. Looking at that next one we already talked about. Momentum, big step up. Volume doubled from the previous day, which is what you want to see if you're going to get that continuation. Moving over to the Dow here on the weekly view, you can see very strong candle, got above this trend, got above this shorter term downtrend, kind of looks like a bull flag now, which is interesting. Rallied into the zone, multiple weeks of chop, very long bull flag if it is one. And we broke out here now. We're looking like we're going to go higher. Very big candle. Momentum not quite bullish yet, and you can see how we've been chopping around that zero line. But if we get a continuation early next week, you would expect that to flip to bullish. RSI is above the 50 line. Everything looks pretty good here on the Dow. Not as good as the Russell, but better than the NASDAQ. Moving over to the daily chart, you can see that big step up in volume, bullish momentum, similar to the Russell, got above this area. You could argue that it looks similar to this previous push above the trend line. I would say this looks a little bit more aggressive, especially with the gap up, big bullish candle. Looking at 339.11, if we get above that level for 343.23, and then above that we have the previous high going back to December at 347.67. If this is a bull flag and this is a true breakout here, I would expect to get up to those previous highs up around that 347.67 level, which would be a very strong move for the Dow from here. Moving over to the equal weighted S&Ps here on the weekly chart, you can see we're still hovering in this wedge. You want to see this breakout next week if it's going to happen, get above that 145.08 level and start to push up to 149.82. That would be very bullish. You'd like to see it start to catch up to the regular SPY, sitting all the way up here in comparison. We had been trending basically on top of each other, going all the way back to May of last year, with the regular S&Ps actually outperforming a little bit here in November all the way up until March. And then recently they've basically tailored off, and tech has been leading us much higher on the regular S&Ps. I want to see these start to come together if this is going to be a healthier rally. But otherwise, looking at the equal weighted, you can see nice step up in volume, momentum ticking towards bullish. I would like to see this flip bullish and get above that 145.08 level. And then we can start believing in this rally even more than we already do. Moving over to copper versus gold. This has been falling off a cliff here recently. And over the last 3 weeks, you can see we found a little bit of a base at these previous lows. You'd like to see it flip a little bit more towards bullish on momentum. Volume actually stepped down last week, which is not what you want to see. If this starts to rally a little bit more, that would be nice. And similarly, you want to see it start to catch up to the S&Ps. You can see the S&Ps generally chop in a similar range to the copper divided by gold ratio, and then that clear divergence that we've seen over the last couple of weeks. If the rally continues, you want to see this ratio start to rally a little bit, or at least moving in the same direction. Moving over to the ratios here, looking at the SPY divided by the M2 money supply, you can see we broke above that 2050 level. That really was what started this bigger push up. We're out of this rising wedge now, and it looks like we're headed to these March highs. Remember, this ratio kind of flattens everything, so we're a little bit higher on this ratio than we would be on the regular S&Ps. So we're looking at those March highs as the peak at 2122. And then if that level breaks, then it looks like we'll retest the November highs as well as the pre-COVID highs sitting up at that 2205 level. And I don't expect to get above that level. Obviously, this would be a very powerful level. Getting into that area would mark a triple top. And generally, when we get into that range, that tends to be the peak of the markets. Talked about this multiple times. It's a very important level going back in history. So 2205, peak of the markets most likely if we get that high. 2122 here in the short term. Moving over to the NASDAQ divided by SPY and NASDAQ divided by Russell here, you can see NASDAQ divided by SPY hit that 3.43 level. Talked about this in last Sunday's video being the next upper level. Hit that level and then pulled back, and it seems like we're probably going to see a fairly substantial pullback. If not another flag type setup, we hit that trend line as well. It's been a very steep curve, but definitely respected multiple times now. This would be the third test of that trend line. So I would expect some SPY outperformance over the next week or two at least. Looking at the NASDAQ divided by Russell, you can see we did see the pullback. Added a new level here at 8.18. That's the new high for this ratio. Looking to pull back to these previous highs at 7.88. We're almost there already. And if we do see a little bit of a breakdown, maybe 7.66, which would be the close high from this previous high. And it does seem like that's possible. The Russell was definitely running on Friday, and it seems like that's going to continue here. So a little bit of Russell outperformance versus the NASDAQ and the SPY, and it does seem like the SPY is going to outperform the NASDAQ, at least in the short term. Moving over to the put-call ratio, this is the overall put-call ratio for all equities and indices. You can see we kind of had this V-type pattern coming on. November, December, January of 2020 into 2022 was kind of this inflection point. And then we were in this rising pattern. And it seems like now we're getting a decrease in this ratio. We're kind of below this trend line, holding in this range for the first time. We saw a candle similar to this in January, and then we saw a little bit of a spike after that, creating this return back to these lower ranges. Momentum and RSI are both bearish on this chart. Obviously, it doesn't work quite the same way. But getting back into this range between 1/2 and 3/4 does kind of indicate that we're getting into a little bit more bullish area. Obviously, it can stay in this range for a long time, and that can definitely generate a rally. And we'll keep an eye on this. If it starts to trend up like we saw leading into that bear market, that'll be something to watch. It is worth noting here that we're moving back into bullish territory on the overall put-call ratio and not just the SPY ratio that we look at on Max Pain. Moving over to Apple and Tesla here on the monthly charts. You can see Apple flipping to bullish momentum on this month. First month going all the way back to March of last year. Kind of looks like a giant bull flag, which is interesting. And now we're breaking out here, about to set new highs. probably next week, as long as we get the continuation here. Tesla, on the other hand, looks like a higher low setup. So you had the low here in December and January of 23, setting up for April and May of 23 as that higher low. And now it looks like we're starting to push back up to that 217.14 level or 223.84. Moving down to the weekly chart just for a moment, you can see Apple here has been relentless and it continues to look quite bullish. Tesla really started to rally here this last week. It had been rallying for 3 weeks, but it was kind of in this same range that it's been in. I was actually looking for a little bit of a downturn off of this trend line that had been holding it down for the last few months. But we broke out of that level. We're retesting this high in February. And like I said, looking up to 232.84 now. 232.84 as my next level of horizontal resistance. Moving over to Roku and Netflix. I've been talking about these for a while here. Roku looking very bullish, momentum ticking bullish on the weekly chart, looking to push up to 64.95 right at the 55 EMA at 64.62, right in the same zone. I would expect to get up to that level, potentially retest these highs up at 74.08, certainly possible. Netflix, still very bullish, but it seems a little bit more exhausted here. We're right at the 200-week moving average. We hit that level this week, 404.89. It's still definitely in this uptrend, and we're kind of at the midpoint here. If it breaks out, maybe we push up to the upper band of this trend line, certainly possible. That would correlate with the lows going back to June of 21, right in that 484 range. But similar to Apple here, we gapped up and dojied. And if we gap down and start to fall, that would be quite bearish on Netflix. Everything is very bullish still. Momentum and RSI both look good, but it's something to pay attention to, similar to Apple. Moving over to staples and discretionary on the weekly charts, you can see staples actually found a little bit of buyers. Momentum is still flipping towards bearish and looks like it's going to continue here, so probably just a shorter term pullback. And then if we get the continuation and a break of this trend line and that 72.50 level, get down to 70.85. And then if that breaks, then this looks more like a double top setup. We've actually tested that high area 3 times now, and we've pulled back every single time. And like I said, if this breaks down from this midpoint here, that looks definitely very weak, potentially all the way down to 66.27. If we hold right here, that would be another higher low setup, and this trend could continue. Then it looks like a bullish rising wedge, and we could start to look for that initial breakout up to 79.90. Discretionary, on the other hand, looks very bullish. We're testing this previous high at that 158.03 level. We've been talking about that for a while. Next level is 161.99, and then above that, we have the gap fill sitting up at 166.78. Going back to these highs from August of 22. Discretionary has been lagging here, but it is starting to rally, and you can see the clear difference. Discretionary rallying, staples moving lower with bearish momentum. Moving over to the sectors over the last month, you can see semis continues to lead by a wide margin, tech and consumer discretionary in third, followed by communication. AI has been leading us over the last month. That's been pretty obvious. But otherwise, below that, you can see we're still in a risk-on type play. And then you have oil and gas sitting in this mid-range, followed closely by financials as well as energy. Moving over to transports here on the weekly chart, we got a little bit of a breakout just above this shorter term trend line. Similar to the Russell, we've been in this zone for many weeks now. Momentum flipped to bullish, which is interesting. RSI ticking up here slightly. We're at trend resistance, but if this breaks out and we start to see transportation, the Dow and the Russell all starting to head higher, again, that would be a pretty bullish indicator. And it does seem like that is going to be the case based on what we're seeing. You have multiple higher lows, and we're setting up for a clean breakout, in my opinion. Moving over to stocks above their 50 and 200-day averages, you can see that huge gap up that we had on Friday back into this previous range. We talked about this being kind of a consolidation type area with 2 island reversals, indicating some decent support at this level. And now we saw that follow through here. And if this breaks out above these trend lines here and we start to push back into a more healthy range on these charts, that indicates to me that we're starting to get more players participating in the rally and that we might actually see some much higher highs. Moving over to the dollar here on the weekly chart. I've been quite bullish on the dollar, but we got a doji on the week, which is interesting. We're at resistance, 104.41, watching that level. 105.50 is my next upper level. Momentum is still bullish and RSI still looks bullish. So maybe this is just a shorter term pullback and then we see the continuation up to these previous highs at that 105.50 level, or maybe all the way up to the trend at 106.91. That would be very interesting. But if stocks are going to go much higher, honestly, we would want to see the dollar start to pause and maybe pull back. And then we just get a bit of a ranging market here on the dollar, which should allow equities to continue with their current momentum. Moving over to JNK and TLT here on the weekly charts. You can see JNK testing that downtrend line. Looks like it's setting up to break out here. Looks like a higher low setup off of trend support. If this breaks out of this wedge and starts to rally back up to that 92.50 level or $93, that should be very bullish. Kind of looks similar to the equal weighted S&Ps in terms of structure. And similarly, if it starts to break out, that should be a nice confirmation. Momentum flipped bullish. RSI, you want to see it get above that 50 line. That would be nice. TLT, on the other hand, looks quite weak. It's below this shorter term downtrend line. Tested that level and got rejected. Momentum bearish. RSI also looks weak. I think TLT might just be stuck in this range until we start to see some clear direction in terms of cuts from the Fed. Right now, they tell us we're going to hold for a long time, at least until next year, and it seems like TLT is just going to hold here until we get that first inkling of cuts. Moving over to the MOVE index and the VIX, we talked about the MOVE breaking down below these trend lines, looks quite weak. Moving over to the VIX, similarly, looks very weak. It's taking out these lows here. Maybe it comes all the way back to 2019 levels around 1177. That would be interesting. But we tested these previous lows. Looks like we're going lower. Looks super bearish here on the VIX. Again, indicating that we're probably going to go higher on equities. Moving over to my accounts here, not much to say. Everything is still very bullish. So all of my positions are bullish. I have 2 covered calls here on the NASDAQ, 2 short puts at 352, and then I have 3 short puts on the IWM. I am more bullish on the IWM. It does seem like a solid breakout and a potential to move $10 to $15 higher from here over the next several weeks. So I'll be watching that one. I think I'll probably move more heavily into the IWM over the next week. So overall, very, very bullish. Let me know down in the comment section if you think AI is going to take over the economy or if it's just going to destroy all humans. And is the chat ETF worth investing in? Definitely like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.